Friends, if you or your friends is investing in the stock market, then you must have heard about SEBI. If you do not know about SEBI, please do not invest in stocks or any investment products. Unfortunately, more than 50% retail stock market investors and 80% of common people in India are not aware of SEBI and its powers. Without knowing more details about SEBI, many new investors are rushing to invest in options or derivatives or cryptos or investing in fraud companies. So, today we will talk about SEBI, such as what it is and how it works. Indian capital market is one of the largest capital markets in the world, and it plays an important role in the global market and in our economy. Like everything, market needs a special body for its governance. In the same way, SEBI has been constituted on April 12, 1992 in accordance with the provisions of the Securities and Exchange Board of India Act 1992 by the Government of India to control and monitor this capital market. Let's discuss what is SEBI. SEBI, or the Securities and Exchange Board of India, is a regulatory body that regulates the Indian stock exchanges and financial markets. The stock exchanges, stocks, mutual funds, bonds and almost every other financial product and player in the Indian financial markets are regulated by SEBI. The basic function of SEBI is to protect the interests of investors in securities and to promote and regulate the securities market. SEBI is governed by its board members. The board consists of a chairman and several other full-time and part-time members. Among others, 2 members from the Ministry of Finance, 1 member from the Reserve Bank of India and 5 other members are also nominated by the centre. The chairman is nominated by the central government. And at present, Srimati Madhabi Puri Bach is our SEBI's chairperson. The headquarters of SEBI is located in Mumbai and regional offices are located in Hyderabad, Ahmedabad, Kolkata, Chennai and Delhi. Now, let's look at the reason why SEBI was established and its history. It was established on 12th April 1988 and was given statutory powers on 30 January 1992 through the SEBI Act 1992. During the decline of 1970s and the rise of 1980s, people of India were preferring to work in the capital market as the market was trending. But it got many problems. Problems like informal private placement without any authority, price manipulation, informal merchant bankers started violating the rules and regulations of the stock exchange, which delayed the delivery of shares. Friends, you might have remembered a famous web series name which is based on the first scam in Indian stock market history. The government felt an urgent need to set up a regulatory body to regulate its functioning and to find solution to all the problems faced by the market. This was happening because people were losing faith in the market. To maintain this faith of the people, the Security and Exchange Board of India was established by the Government of India. But before SEBI, the Indian capital market had a regulatory authority called the Controller of Capital Issues, empowered under the Capital Issues Act 1947. Friends, to understand SEBI properly, first we have to understand its structure. SEBI consists of various departments under a corporate structure that are managed by department heads. There are total around 20 departments in SEBI. These departments include legal affairs, corporate finance, debt and hybrid securities, enforcement, economic and policy analysis, commodity derivatives, market regulation and many others. SEBI has a hierarchical structure consisting of the various members that are: SEBI is headed by the chairman who is nominated by the central government of India. The Union Ministry of Finance appoints 2 of its officers as a part of this structure. The Reserve Bank of India appoints 1 member. The Central Government of India nominates 5 members. The Parliament established the SEBI Act 1992 to regulate and develop the securities market in India. It was further modified to meet the changes in the evolving requirements of the securities market. SEBI establishes rules and regulations, policy framework and infrastructure to meet the needs of the capital and financial market. Friends, now let's understand the financial market that SEBI regulates. Financial market mainly consists of 3 groups: issuer of securities, investor and financial intermediaries. First is issuers of securities. Issuer is the group which works in the corporate department to raise funds easily from various sources in the market. That is why SEBI helps the issuers by providing a healthy and open environment for them to function efficiently. Second group is investor. Investors are the soul of the market as they keep the market alive by providing accurate supply, right information and security to the people on a daily basis. SEBI helps the investors by creating a malpractice-free environment to attract and protect the money of people investing in the market. And last one is financial intermediaries. Intermediaries of people who act as intermediaries between issuers and investors. SEBI helps in creating a competitive and professional market which serves better to issuers and investors. They also provide efficient infrastructure and secure financial transactions. Now, let's talk about the most important role of SEBI, that is, its functions. After SEBI being a statutory body, it got the powers to perform many important functions. The SEBI 1992 Act defines these powers and works. SEBI's functions make it an issuer of securities, a protector of investors and traders, and a financial intermediary. In Section 11 of the SEBI Act, the work of SEBI is mainly divided into three types: protective function, regulatory functions, developmental functions. Let's discuss these functions one by one. 1. Protective function. The purpose of this function is mainly to keep track of the functioning of the businesses in the financial markets. Some important parts of it are: investigates manipulation of share prices, prohibits insider trading, promotes fair share transactions, alerts investors, prevents transactions in securities in a fraudulent and improper manner. Second type of SEBI functions are regulatory. Under this function, SEBI protects the interests of investors and other financial participants. Some important points are as follows. It lays down the guidelines for proper functioning of financial intermediaries and corporate and forms the code of conduct to investigate and audit transactions in securities. Provides a platform where portfolio managers, bankers, stockbrokers, investment advisors, merchant bankers, registrars, share transfer agents, and others can transact simultaneously. It regulates fair acquisition of shares over a period of time and acquiring companies. 3. Developmental functions. The development of SEBI is also included in the main tasks. Some of its main points are as: training of brokers, educating the investor about investing, to conduct research and publish information useful to the participants of the stock market and to all, promoting fair transactions, encouraging self-regulatory organizations, buy and sell mutual funds directly or through a broker, promotion of fair dealings, to take note of fraud and take appropriate action. So, these were core functions of SEBI. I hope you liked this video, friends, and learned something from it. If you have any other doubt or topic you want to know, please comment down so we will make a video on that too. Friends, if you like this content in this video and our efforts to share this information, please subscribe our channel for more updates and please share the video link with your friends and family members. Thank you.